Welcome back to 10K SOXL Trader Challenge. This week marked our return to trading after a brief pause. We focused on steady execution and risk management, ending the week with a positive return. Weekly net change, plus $70.21, ending net assets, $10,357.17, weekly return, plus 0.68%, based on a starting net asset value of $10,286.96. Trade replay and execution review. The two trades this week, one win and one loss, resulted in a 50% win rate and a net gain for the account. Trade 1, win, entry logic. Momentum acceleration after a pullback stabilized. Result, plus $139.23. Reflection, validated the effectiveness of precisely capturing a short-term trend within a specific market structure. Trade 2, loss, entry logic. Continuation of the upward trend. Result, minus $69.02. Reflection, when momentum failed to continue, the system decisively triggered a stop loss at the key level of 34, strictly containing the loss and preserving most of the day's profits. Index and sector analysis. This week's market environment was characterized by high-level consolidation, with major indices showing signs of stagnation and increased volatility near their annual highs. QQQ, Nasdaq 100 Index, closed the last trading day at 595.97, repeatedly testing resistance near the 600 mark. Despite a strong year, this consolidation indicates a balance between bulls and bears, with the market awaiting a new catalyst. VU, S&P 500 Index, closed at 610.16, also trading in a narrow range near its 52-week high, reflecting broader market caution. The trend is intact, but upside appears limited. Impact on SOXL. In this context, SOXL's high beta means its intraday volatility is amplified. Purely directional bets become riskier, making flexible strategies like partial profit taking and disciplined risk control at key levels more suitable for the current environment of shorter trend legs and frequent pullbacks. Weekly news flow. The macro environment was a mix of policy uncertainty, interest rate expectations, and significant cross-asset divergence. Policy and uncertainty. The market remained focused on a potential U.S. government shutdown, creating short-term pressure and concerns over the continuity of economic data releases. Interest rate path and quarter-end effects. Repricing of the Fed's future rate cut path, combined with month and quarter-end institutional rebalancing, contributed to higher volatility, stickiness, and more frequent price swings. Cross-asset divergence. The strong gold, weak oil theme became more pronounced. Gold broke $3,800 per ounce to a new all-time high, driven by rate cut bets and safe haven demand, while oil prices weakened due to concerns over rising supply and slowing demand. Quantitative trading summary. Win rate, 50%. Profit factor, 2.02. Total profit, total loss. Gross P/L, plus $139.23 per minus $69.02. Average hold time, approximately 61 minutes per trade. Closing and outlook. This week's trading validated that in a consolidating market, disciplined risk management is key to achieving positive returns. Looking ahead, the market will continue to focus on the battle for QQQ around the 600 mark. The outcome at this key level will directly influence overall sentiment and the short-term direction of tech stocks. From a bullish perspective, a successful breakout and hold above 600 could signal a return of risk appetite and open up new upside. From a bearish perspective, persistent rejection at this level could confirm it as a short-term top, potentially leading to continued range-bound trading or a correction. Meanwhile, as a high beta proxy for the semiconductor industry, SOXL's price action will be heavily influenced by QQQ's direction, with amplified volatility. Therefore, the interplay between QQQ and SOXL, along with fund flows within the semiconductor sector, will be key points of observation next week. Feel free to leave your outlook on QQQ and SOXL in the comments below. If this weekly recap offered you any insights into managing trading pace and risk, please consider liking and subscribing. All content is for personal live trading records and educational sharing only and does not constitute investment advice. See you next week.